Hey, it's Tom here and welcome back to the channel. Now, just yesterday as I'm recording this video was the Daily Journal Corporation annual meeting. It is similar in many ways to the Berkshire Hathaway annual meeting, where you have a couple of the key individuals at the company kind of get up and basically talk through a long Q&A session. At Berkshire, it's obviously Warren Buffett and Charlie Munger, and at the Daily Journal Corporation, it is largely Charlie Munger, although the CEO of Daily Journal is also present and answered kind of one or two questions. It really is the Charlie Munger show, and first thing I want to say right off the bat about this Q&A session from Charlie Munger is just how impressive it is that a 98-year-old man can get up there and answer questions for 2 hours straight. It's clear that he's not as sharp as he was 20 years ago, which we've obviously got to cut him some slack on that front. But to be able to get up there and answer some very challenging questions about some of the things going on at Daily Journal and in the DJCO portfolio around Chinese stocks and Alibaba and so on, and then also talk more broadly about his view on kind of worldly wisdom as well. It's pretty impressive for a guy of any age really, let alone 98 years old. So in this video specifically, I'm not going to cover everything from the Daily Journal meeting. That would be way too long a video. But it looks like the kind of most popular questions that were coming into CNBC's Becky Quick, who was asking the questions to Charlie Munger, were really around what the Daily Journal Corporation is doing with its stock portfolio. If you don't know already, the stock portfolio is managed by Charlie Munger. It makes up a very large percentage of the overall Daily Journal Corporation market cap and its sort of underlying intrinsic value. And recently there's been a lot of activity in terms of buying into Alibaba specifically, as well as potentially some activity in international stocks that we don't necessarily get as much visibility on. So I'm going to go through some of the things that Charlie Munger said around Alibaba and around the stock portfolio more generally, and give you my view on some of the things that he said. So if you enjoy the video, definitely hit like and also subscribe to the channel if you are new here. But without further ado, let's get straight into the first clip from Charlie Munger.
But the first part of the question is, how does the Daily Journal plan to handle its investment portfolio after Charlie steps back?
Charlie, I think you should answer that.
Well, I'll handle it as long as we can, and when I'm gone or sufficiently impaired, we'll get somebody else to do it.
That's a classic Charlie Munger answer. When I'm sufficiently impaired, we'll find someone else to do it. Not a whole lot to add on that one from Charlie, but it will be certainly interesting to see who takes over the stock portfolio at DJCO. In last year's Berkshire annual meeting, Charlie kind of gave away that Greg April is likely to be the new CEO at Berkshire Hathaway once Warren kind of steps away or passes away. We get to get that information at DJCO, but I'm sure they have a plan, even though Charlie Munger didn't give away a whole lot here.
He says, I noticed that our company is using margin debts to purchase overseas securities, and the overseas security is not reported in the SEC filing. As a shareholder, am I entitled to know what overseas security we own on margin? Thank you for taking my question.
Well, the practice at Daily Journal and Berkshire is the same. We disclose what we have to under the rules because we don't want people to know what we're buying and selling. So we tell everybody what we have to under the rules, and we keep it confidential until then. That's our system.
Now, keeping stocks confidential for both Buffett and Munger is a practice that has kind of flowed on from the very early days of their investment partnerships. I'm currently reading one of the Warren Buffett biographies, and it sort of talks through him meeting with investors in the 1950s and 60s, and basically explaining that you're going to give me some money to invest, hopefully, and I'm not necessarily going to tell you where that money is invested. And that sort of caught a lot of people off guard, I think, back in the day. And at that time, it was really about minimizing competition in terms of finding investments. Or often Warren and Charlie were buying very illiquid, very small companies, and they didn't want extra competition in the market kind of driving up the prices of those stocks. the stories of people who used to go along to Ben Graham's classes, and Ben Graham would use case studies of live examples that his fund is currently buying, and people would kind of go to that class purely to kind of pick up those stock tips. And I think that's just kind of a tradition that's been held, all these years later through both the Daily Journal Corporation and Berkshire Hathaway. Yes, they view their shareholders as partners, and they're trying to act responsibly, swing big when opportunities arise, and kind of sit still when they don't. And I think that's kind of still the practice at DJCO and Berkshire, but still there's kind of limited visibility on talking about individual stocks. Warren Buffett has a huge chunk of the Berkshire portfolio on Apple, and he said a couple of things about Apple over time, but he never really has laid out like a full investment thesis or anything, or spoken in depth about what he plans to do with that position long term. So we're seeing that same practice flow through to the Daily Journal Corporation here via Charlie.
He writes in January, Jeff Gundlach was quoted, "China is uninvestable, in my opinion, at this point. I've never invested in China long or short. Why is that? I don't trust the data. I don't trust the relationship between the United States and China anymore. I think that investments in China could be confiscated. I think there's a risk of that." End quote. Obviously, with a significant percentage of the Daily Journal's marketable securities invested in BYD and Alibaba, you feel differently. Please explain why you are right.
Well, of course, only the future knows who's going to be right. But China is a big modern nation. It's got this huge population and this huge modernity that's come in the last 30 years. And we invested some money in China because we could get more value in terms of the strength of the enterprise and the price of the security than we could get in the United States. Other people, including Sequoia, the leading venture capital firm in the United States, have made the same decision we have. But I'm sympathetic to Gundlach. If he's nervous, he doesn't have to join us. Different folks have different opinions. I feel about Russia the way he feels about China. I don't invest in Russia, so I can't criticize Gundlach's point of view. It's just I reach a different conclusion.
Now, this is really the first time that we've got some new perspective from Charlie Munger on why he may have purchased Alibaba in the DJCO portfolio, but his answer to the question here was something that he's actually said several times over the past few years. And Charlie Munger has had money in China via Lilu for a long time. He's had money in BYD via the Daily Journal Corporation for a long time, as has Berkshire Hathaway actually. And Charlie has said several times before that he thinks the best companies in China are cheaper than the best companies in the US. And he added a slight twist to that same kind of sentiment in this particular clip from the DJCO annual meeting. And he said that, he thinks the companies are both stronger and cheaper. So interesting to understand that from Charlie Munger. I think we get that similar kind of sentiment from a lot of the super investors that have flowed into stocks like Alibaba or Tencent or Prosus or JD.com or whatever it might be. The businesses are just flat out cheaper than their US counterparts, and assuming that some of these additional potential risks with regulatory pressures and political uncertainty and so on, assuming that those risks don't materialize significantly, that should lead to better returns over the long term. So somewhat expected to hear that kind of statement out of Charlie Munger, but nonetheless really good to confirm what he's thinking.
Roberts, and he says, Charlie, you and Warren have been making concentrated investments since the 1950s. Many of these investments have led to gains, but even more impressively, none of them have led to significant losses. As far as I can tell, neither one of you has lost more than a few percentage points of equity on any single investment. Daily Journal has recently bet a large amount of its capital on Alibaba and foreign traded stock. It's also taken on an additional $40 million in margin debt to make these investments. What makes you so sure that these investments won't lead to a substantial impairment of Daily Journal's equity capital, which would impact the company's ability to reinvest the resources needed to develop the company's software operating business?
Well, of course, if you invest in marketable securities, you have the risk that they'll go down and you'll lose money instead of make it. But if you hold a depreciating currency, that's losing purchasing power. On balance, we prefer the risks we have to those we're avoiding, and we don't mind a tiny little bit of margin debt.
Now, a couple interesting things there. When Charlie first purchased Alibaba via the Daily Journal Corporation, one of the things they said was that sometimes they invested marketable securities as kind of a cash alternative, and I read into that initially as kind of just like a PR spin. And that really, Charlie Munger doesn't buy stocks because he wants somewhere else to kind of hide the cash short term. These are long-term investments for Charlie Munger, and impressive that he can still think in terms of making long-term investments, again, when he's 98 years old. So that's the first thing. The second thing around the margin debt, so Charlie and Warren, particularly Warren, Charlie less so. Charlie seems to have been more open to debt over time, but Warren Buffett has always basically said just never invest, using margin. We all know that when your stocks go down, you can potentially expose yourself to margin calls, in which case you either have to put up more capital to keep sufficient kind of equity in that arrangement, or you are forced to sell stocks at the exact time that you really want to be buying them at the low prices. Now, one thing to keep in mind specifically with the Daily Journal Corporation, and Matt Peterson has done some great talks that you can find on YouTube on this topic, is that at least as I understand it, the Daily Journal Corporation has a really interesting and kind of unusual structure around their margin debt, which makes it non-callable. So traditionally the margin loans at Daily Journal, which were around but to a smaller extent before the Alibaba investment, those loans have always been serviced by the dividends that come in from their bank holdings. So from Bank of America and Wells Fargo and I believe US Bancorp are the three bank stocks that are in there. And that really minimizes a lot of the risk that could arise in terms of margin calls from volatility in markets. So that's something to keep in mind. And Munger clearly doesn't think that margin loan is large by any means. He said he doesn't mind a tiny slither of margin debt in the portfolio. So there you have it from the man himself. But I think it's just important to mention that the margin debt being used here by the Daily Journal Corporation is not your traditional margin loan per se. And I think a lot of the lessons from Buffett and so on about not investing with margin and not overexposing yourself still definitely make a lot of sense. Now I want to have a look at two final clips from Charlie Munger talking about China and Alibaba kind of from this Daily Journal meeting. There are a couple of questions that got somewhat political, which I'm just kind of going to skip over in this video. But there are some interesting questions around the VIE structure, which is kind of the Cayman Islands entity, sort of the derivative that you own when you're purchasing BABA, the stock. So Charlie Munger does comment on that, and he also got a question actually about why Warren Buffett and Berkshire Hathaway haven't been buying Alibaba, which was quite interesting as well. So let's check out the VIE structure clip first here from Charlie.
Lots of questions on Alibaba. That was the one question that I received more than any other, so I'll dig a little deeper through some of these. Someone named Vishal Patel from Toronto wrote in and said that as a Daily Journal owner, do we own local shares of Alibaba? Does that actually give us legal ownership of that business, or do we have a variable interest, and is that the same? Net, what do we own? And I did get a series of questions related to that same sort of thought.
When you buy Alibaba, you do get a sort of a derivative, but assuming there's a reasonable honor among civilized nations, that risk doesn't seem all that big to me.
Well, another classic short answer there from Charlie Munger. But that actually seems to mirror kind of the sentiment that was initially put out there by Monish Pabrai. I think the Everything Money channel here on YouTube did a really good interview with Monish Pabrai not too long ago. And they started talking about Alibaba, and they were apparently even talking about Alibaba a little bit kind of outside of the recording with other people in Pabrai's office and so on. And they started talking about this VIE structure and, do you think it's a risk? And they kind of looked at them funny, like it just doesn't even matter why you're even spending time thinking about that. And it clearly is a risk, to not have the same kind of ownership structure as you might with a traditional US company or a New Zealand or Australian company or whatever it might be. But Charlie clearly thinks that it's a pretty low probability event that ownership would be confiscated or something would kind of happen with the VAE structure that would ruin the investment. So he clearly thinks it's worth swinging at, even given that VAE structure. Okay, and final clip here from Munger talking about all things Alibaba in the Daily Journal meeting, and this one is about, why has Warren Buffett / Berkshire Hathaway not yet invested in Alibaba? So here we go.
Covered a lot of ground on this. I'll ask that because it's slightly different. This one comes from John Mooney in Marshfield, Massachusetts. And he says, Charlie, Alibaba is a top 3 holding for you. It sells at a steep discount to its U.S. peers. Best comparable is Amazon, which is triple Alibaba's PE. So what discount should U.S. investors seek when buying Chinese stocks, considering the political, regulatory, and especially the ownership structure risk? Oh, and considering the fortune Berkshire made on your BYD suggestion, why doesn't Buffett buy Alibaba?
Well, Warren, like many other intelligent people, likes to invest where he's personally comfortable. And for some reason, I'm more comfortable with the Chinese than he is. That's a minor difference. But I have all kinds of places where I'm just like Warren. I have all kinds of things where I'm not comfortable, and I just don't go near them. I think an old guy is entitled to invest where he wants to invest.
What makes you uncomfortable? What do you not?
It's okay to have some things that you just don't want to bother with.
Well, again, probably an answer that most people kind of expected if they had followed Buffett and Munger for a long time around. Why is Munger comfortable buying Chinese stocks like Alibaba versus why is Warren Buffett potentially not, and why haven't we seen Alibaba turn up in a Berkshire 13F filing or something yet? It really is to do with kind of comfort and circle of competence. Munger has been sort of very pro-China and pro-investing in China for a long period of time. He's made a lot of money in China via Li Lu's fund, Himalaya Capital, and he's also made a lot of money through BYD for the Daily Journal Corporation. It's really moved the needle quite significantly. And although Berkshire has had an ownership in BYD as well since I think as early as maybe 2012, the stock kind of went sideways or basically flat for a long period of time, and in more recent years it's shot up a lot and become a very substantial holding actually for Berkshire. But Warren Buffett always described that BYD holding as, kind of Munger's holding and one of Charlie's ideas. So he was always the one that would take questions about BYD and so on. And really not much has changed. Warren Buffett has been very pro-US obviously for a very long time, as has Charlie Munger, but Warren really likes to invest where he's very comfortable. He doesn't swing at big investment pitches very often anymore. The last really big bet we saw from him was Apple, obviously, in 2016. We have seen some other changes in the portfolio, but he really is happy to sit around and, as he's taught for many years, watch pitch after pitch go by and wait for one that's right in his sweet spot. And I just don't think that Alibaba is that for him, even at current prices. So there you have it. Those are some of my favorite clips from the Daily Journal Corporation annual meeting just yesterday on all things China and Alibaba. I'm a shareholder in Alibaba, or an ADR holder, or however you want to word it. So really interesting to get Charlie's thoughts on the whole thing. And I think a lot of these answers were things that we may have kind of expected Charlie to say, which is great to see that we're maybe starting to figure out a little bit how Charlie Munger thinks. He's many levels of IQ and so on, ahead of me especially, but probably most of us, I would say. But nonetheless, it's really good to get Charlie's thoughts on this topic. So I do hope you enjoyed the video. If you want to check out the full DJCO meeting, if you haven't already, that will be linked down in the description below. But that's it from me for this one, and I will see you in the next video. Cheers.